In today's video, we're going to be talking about how to sniff out a poorly designed index universal life insurance policy. The first thing that I want you guys to understand is that if you are looking to get into an IUL, it's probably because you want to take advantage of the cash value and you want to be able to earn interest tax-free with zero market risk. The only way to do that is to have a max funded IUL or to have a high cash value IUL. Now, in order to have that, there has to be a specific design. Now, what needs to happen is that the agent needs to give you the smallest death benefit possible so that the emphasis of the policy can be on the cash value. If the death benefit is too high, then it's not going to allow the policy to actually perform as well as we want it to. Because the way that the fee structure is with most IULs is that the fees are due at every 12 months, but the interest gets credited every 12 months. And if it's properly structured, what's supposed to happen is that the interest accrued is supposed to pay down all of the fees, and there's still supposed to be a decent amount of interest left over that gets paid into cash value. However, if the cost of insurance is very high because the agent gave you a very large death benefit, then what's gonna happen is that after the interest pays down the fees, there is not gonna be a substantial amount of interest left over paying into cash value, which means that your cash value isn't growing as fast as we'd like it to. Now, you might be asking yourself, why would an agent not want to give me a small death benefit? Well, at the end of the day, you are buying the death benefit. You are buying life insurance. And so the more life insurance you buy, the higher the compensation for the agent. Now, obviously, there are some bad eggs out there and there are some unethical agents. And so they would rather sacrifice the performance of your IUL to make sure that they get a nice and decent payday. That is why you have to make sure that you're working with a trusted agent who understands how to properly structure these policies like myself. So that's the number one thing to look for, is to make sure that you are getting the minimum non-MEC, which just means that you're getting the smallest death benefit possible without triggering any taxes. Some other things to look for is to make sure that your policy offers alternative loans. The reason why you want alternative loans is because that is the way that you're going to be able to actually practice the infinite banking concept. Because the infinite banking concept is when you keep your money sitting inside the cash value, and instead of taking loans out of your cash value, alternatively, you're taking loans from the insurance company. So you want to make sure that your IUL offers alternative loans. You also want to make sure that your IUL does not have any caps. There are some policies out there that are uncapped, like the IULs that I structure, they don't have a cap. So if you know that there are options out there that are uncapped, why would you pigeonhole yourself and place yourself into an IUL that is gonna cap your growth? You also wanna make sure that the insurance company that you're using has been around for anywhere from like 95 to 100 years. And you wanna make sure that they are a AAA+ rated company, because at the end of the day, your money is being like invested with that insurance company. So you want to make sure that you are using a reputable life insurance company that's been around for about 100 years. You also want to try to work with an insurance company and an agent that can provide you with an IUL that has multiple different index strategies to choose from. The reason for that is because you want options. Hopefully some of the options that are on there are uncapped, and you want to make sure that you can get the highest participation rate as possible. For example, the IUL that I structure is uncapped and has a 270% participation rate, which is awesome. You also want to make sure to take a look at the actual performance of the IUL in the last 30, 15, 10, and 5 years. What is the average interest rate on this policy? Is it 5%? Is it 6%? Is it 7%? What is the historical average of this policy? For example, the policy that I structure has a 30-year historical average of 17.5%. And a big reason why is because of the very high participation rate, as well as the fact that it's uncapped. If you go ahead and decide to put your money into an IUL that is capped at 9% and has a 100% participation rate, then no wonder that policy's 30-year historical average is gonna be around 7 to 8% because it's capped at 9 and can never do any better than that. That's pretty much everything that I have for you guys today for this video, but if you wanna learn more about either the IULs, FIAs, or commercial multifamily real estate, subscribe to this channel and feel free to go ahead and use the links in the description of this video to go ahead and book a one-on-one with me or to actually come to my Wealth Accelerator workshop that I have every Monday.